Small cap stocks can include up and coming companies that are growing fast and names that will eventually become the large cap stocks of the future. On this IBD Explains, we ask, what are small cap stocks and how can they complement an investor's portfolio? Here with me to help break things down is IBD's personal finance and management editor, Matt Krantz. So, Matt, what is a small cap stock?
Now, the small cap stock is generally a stock with a kind of a smallish market value. Generally speaking, 500 million or less. That definition varies, but it's definitely nowhere near the leagues of the giants like, Tesla and Microsoft. These are usually smaller ones that are not even found in the S&P 500.
Right. And if I'm an investor trying to look at how small caps are performing, what's the best way to do that?
That's a great question. That's kind of the key question. There's different indexes that monitor the small caps. So one of my favorites is the S&P Small Cap 600. As you can guess, there's 600 small cap stocks in it. They're a little bit more durable. Usually have more of a long-term track record of profitability and growth. But I think a lot of investors think of the Russell 2000. That's kind of the first one. It's much broader. It has 2,000 small cap names in. And when I say small cap, I mean small. They put really, really small companies in there, some that don't even make money, probably some that will never make money. And that's kind of the challenge of small caps, is because they're not established names like Microsoft or Apple. They're kind of speculative, and you don't know totally what you're getting into. With that said, at one point, let's not forget, Microsoft was a small cap, so was Apple. And that's how you make the big gains, is when you buy them when they're small and then you ride them until they're giant mega stocks.
And how have small caps historically performed versus the large cap stocks?
That's a great question. So generally speaking, over long, long periods of time, they do outperform because you get these giant winners. Like, just imagine buying Microsoft when it was a brand new company with a guy no one's ever heard of called Bill Gates, and riding it all to the way
I'd
to
love to have a time
$3 trillion.
machine for that
Oh
one.
yeah. I mean, those gains are so huge that they tilt the averages, and small caps do tend to do better. With that said, they're also much more speculative than the S&P 500. They swing up and down. They don't have as broad product lines. So, going back to Microsoft, it's, something goes wrong with their Windows operating system. It's a real big problem, and they're not diversified globally. Whereas if you invest in a big cap like Microsoft today, it's all over the place. It's got its hands in everything. So even if there's a setback in operating systems, I don't even think they would care today because they're so big.
And what does the performance of small cap stocks say about the overall market?
Generally, people don't start buying the small caps until they feel pretty confident. So generally speaking, they're kind of late in the cycle, or they're early in the cycle. So when people start getting really speculative and start feeling great about the market, they might buy small caps. Or if they start getting kind of thinking that, we're at the beginning of something big, they might start buying them. Generally, you'll see them lagging, though, when the large caps take off like they did last year.
And for investors interested in small caps, how should they be thinking them in terms of their portfolio, and what's the best way to be invested?
That's another great question. So there's two ways to go at it. If you have time and effort and intelligence and have discipline, and you can go and figure out the best one, like if you can figure out the next Tesla, I mean, you're going to have a hard time beating that. And if you're able to do that, that's awesome. And I would never tell you to do otherwise, because you'll never outperform catching Apple when it's brand new. With that said, most of the stocks are going to wipe out of the Russell 2000. Probably a couple thousand are going to wipe out and end with nothing, or they're going to go down. It's really hard to pick these companies when they're really early stage. They're very immature and they're hard to pick out. As a result, I generally prefer the ETFs as the best bet. There's a couple ways to go at it. First of all, keep in mind that you've got small caps defined by the S&P Small Cap 600 or the Russell. If you want to play it that way, there's the IJR and the IWM. These cut those based on the indexes. Another way to go at it is Vanguard's got one. That's a good, cheap one. It's called VB. And some brokers have individual ETFs, like Schwab has a family of small cap ETFs. Or another thing that we can talk about is some people like to slice small caps even further. So you can get value price small caps. So these are cheap small caps. If that's the case, there's one called the IWN that only invests in those.
Well, Matt, thank you so much for all the great information today.
Thanks for having me.